All right, everyone. SaaS is back, and NVIDIA, I can't even say crushed. They decimated every bear case and came out and said, oh, we're going to do 70% growth in a constrained environment next year. I can't wait to wake up tomorrow morning to see where the markets are. Matt, Chris, how are you doing on this great night?
I'm broke.
I am a little worried.
Why are you worried, CRISPR?
Okay, so we finally closed on this house.
Oh, okay.
Now the thing is, my mother-in-law, she's religious, right? And one of the things is like when you buy a new house, you go to the new house the first time. Sometimes you do like this little ceremony to just welcoming you. And the thing is, one of the things that you do is you draw like this swastika in front of the house, like in red dot. Well, it's this red like material. And so my wife is looking at this and she's like, Mom, what are you doing? Like, don't do that. And, my mother-in-law is like, hey, listen, it's just part of the process. So I got this house that I just bought. There's like a red swastika outside. And so my wife's like, man, like day one, and the neighbors are going to walk by and be like, God damn it. We got racist Nazi immigrants, that just moved in. So
Okay.
I'm worried that
You're
the
not,
first day.
let's keep it to stocks. All right. Let's keep it to stocks.
No, I'm just saying. It's just I'm kidding. It's not that bad. Like it's not visible from the street, so it's okay. I'll clear it up tomorrow. But the point is, like, people don't really understand, like, like Hindus have been using the swastika way before the Nazis ever did. So, but yeah, I mean, I'm sure every person who's an Indian person in the chat, you know exactly what I'm talking about. And you've probably had to deal with the same exact thing if you're somewhat religious. So,
well, we have no idea what you're talking about. So,
you want to see it, or you want to get demonetized? I could show you.
No. NVIDIA, I thought that I was being a little too bullish, saying they were going to do 100% year over year. Okay. I came out and said 215 on EPS, 93.5 billion on revenue. They reported 96.2 billion in revenue, 105% in change. Talking about the fourth straight quarter of accelerating year over year growth. And on the earnings call, Jensen flat out said 70% growth next year in a constrained compute environment. Like, this is take no prisoners. This is an FU to every bear. This is an FU to everybody. And I got to tell you, I believe everything Jensen said. And maybe I'm too bullish because I own a lot of NVIDIA, but this is just backing up what all the hyperscalers have been saying. And the only bear case now is there's a concentrated spend in their customers, which no shit, Ed Zitron, we know, come on basis points. Heard a rumor, Zitron's going to be on the compound and Friends. They usually shoot Thursday afternoons. So if that rumor is true, they would have been shooting when these numbers dropped, and I can't wait to see what he says. But these numbers, I mean, I went through everything. I can't find a blemish at all.
I mean, I thought the bear case was the majority of that compute is being redirected to Anthropic and OpenAI. And I mean, you've got OpenAI executives leaving, right? Which is not good. That could be something that you have to keep your eye on, because if we get a point where OpenAI IPOs, their numbers come out and it doesn't look like it's a sustainable practice, that means that there's going to be a lot of contract renegotiations and that RPO might shrink. And I think that could be a catalyst for a downward move on something like NVIDIA. So I wouldn't say that the bears are necessarily wrong, but I'd say that they are way too generous with the timeline. And I think that's the problem with being a bear, that you can't just be right on the direction. You have to be right on the timing, because if you're not right on the timing, you're going to get blown up.
Right. And the problem for the bears right now is Jensen just guided for $108 billion in Q3. I mean, that's another 12% of sequential growth and 70% next year in a supply constrained environment. I mean, let's just say that they didn't guide for this and everything was from yesterday. The street was expecting 400 billion in revenue this year, and they were expecting revenue to drop next year. Okay, at 400 billion, if they did 50% next year, that's another 200 billion in revenue, and that puts you at 600 billion. At a 50% plus profit margin, that's 300 billion in net income next year. And then the following year, if it dropped down to 25%, you're talking about another 150 billion on top of the 600, putting them at 750 for 2028. And now they said that revenue's only going to drop to 70% next year. I mean, these numbers are insane. And then next year, what if they come out and say for 28, it's going to be 50%? I mean, this company, in my opinion, is so undervalued. It is not even funny.
So did I hear correctly when Jensen was going through the Q&A that they feel like that they have 70% of demand or 70% of what they have for revenue already kind of supplied for? I was trying to completely understand those items that they were kind of referring to in the earnings call, because he said something about, because obviously he said the unconstrained value is going to be much higher, but unfortunately it's not, and they're continuing to search for additional capacity. But did what I hear, like, I was trying to understand if he was talking about 70% of the total demand is supplied, or 70% of what they already have.
So what, in my opinion, what I heard is that what their supply covers is only 70% of what the customers are demanding. And that's why they're supply constrained.
Someone said Chris bought a house, Matt bought a Porsche. What is Steve going to spend some money on? Steve is buying a milk farm, guys. He's going to be a dairy producer. He's going to be supplying fresh milk to all the restaurants in New York City.
Steve will be buying absolutely nothing at the moment.
Maybe new Pokemon cards or something.
Well, but that's always, I buy those every month, so that's normal investment. Steve's buying nothing at the moment. No, you know what? Steve may buy SpaceX. Okay.
Oh yeah, that's not a bad idea. It's not
may buy SpaceX. So yes, they are only expected that their supply will cover 70% of what their customers are demanding from them, and this still is anticipating zero China revenue, which is wild. I mean, these numbers were so good. And the AWS partnership expanded with 2 million additional GPUs deploying from this quarter through Q2 of fiscal 2029. And I think that was one of the most important parts, because Amazon is making such a huge move into the TPUs with Trianium, and they're now deploying 2 million additional GPUs on top of the original buy from NVIDIA, plus Vera Rubin CPUs. I mean, this just goes to show you how big the TAM is, and TPUs and GPUs can live together.
I'm going to take... Sorry, go ahead, Matt.
I was going to say, the thing that I was most surprised about that they said on the call, which makes a lot of sense, is I personally always look at this from the hyperscaler perspective. The Alphabets, the AWSs of the world, the Microsofts of the world. And I feel like there's a lot of granularity around those numbers and that demand. And I think one of the things that Jensen kind of referred to pretty extensively was the other piece of it with respect to the neo clouds, the individual enterprises themselves. And this is something, just because I struggle with this too. How much data do you actually want to use in some of these, say, bots or cloud devices that is secret data that then obviously is going to be trained by specific LLMs and things like that? Do you actually want to start to do things on-prem again, which, Steve, I know is kind of like insane to think, right? We just spent the last 20 years going off-prem, and now we're kind of like bringing things back on-prem. But how much of the enterprise is going to actually be a surplus of that additional sort of capacity? Because one, they don't want to necessarily have to rely entirely on, say, a cloud provider or a hyperscaler for some of these things. And they also want to maybe train their own internal LLMs that might be specific towards a particular industry. So anyway, just some thoughts.
I think CPUs, GPUs, whatever, I think that story is more played out. I think you'll get market level returns with that. But I think the memory part of the conference call was probably the most bullish to me. Like, did you guys see that?
No.
What the comment was? Let me just bring it up so we can see real quick. Take a look at this. So this was the part in the earnings call that got me the most. It said, looking ahead, our preliminary expectation for fiscal revenue will grow 70% year over year. Although we'll work to close the supply-demand gap, we expect supply to remain bottleneck at least through the end of fiscal year 2028. Many of you have expressed concerns regarding gross margins as component costs have risen. As you already are aware, we're experiencing extreme pricing conditions in memory. The magnitude of the price increases has exceeded our prior expectations, are headed even higher into next year. As a result, we're resetting expectations. We want to be direct about this. Memory scarcity today is being driven large part by the AI build out itself, unlike component that simply raises our cost with no offset. Tighter memory supply is a symptom of the same demand surge that is driving our own growth. All this means to me is that one, NVIDIA is likely to lock up even more production.
Your spreads are looking really good right now.
Oh yeah, they're
Your
tremendous.
spreads are looking really good.
Yeah. The thing is, I think the memory CapEx cycle is going to get elongated. Like, I'm not saying memory CapEx, but the memory growth is going to be elongated further. So I think memory is in this weird place where everyone kind of just sold it off after the whole Leopold situation. And that was the perfect time, in my opinion, to buy memory, because there wasn't any indication that memory had reached its like peak at the time, even though it was starting to get like really, really overbought. And then you had this like liquidation event that was nothing to do with the fundamentals of the, like, I'm structurally bearish on memory long term, but that doesn't mean that like in the short to medium term, I think that, you know, there aren't opportunities for these quick bounces, right? And so I think there is a very good chance that we see a surge in memory stocks over the next 6 months, you know. And I think the positioning that people should have isn't necessarily just go into the GPUs, especially with NVIDIA trading at already a $5 trillion market cap. I think if you look at the operating cash flows, the amount of buybacks that like Micron is going to do, like Micron's like 80-90% of their cash flow is going to go back into buying back shares at a PE of what? Like a single digit PE? Do you know what that does?
Yeah, the funny thing about Micron is the entire bear case was memory cyclical. It's like, yeah, no shit it is. But this time, that cycle is going to get extended. Like at some point, they're not going to be able to grow. And at some point, their revenue will fall off. But that some point keeps getting pushed off. And it may not be for 5 years. Like this may not be a typical DRAM boom bust cycle that lasts for a year and a half. I mean, I think we're seeing a lot of evidence that this cycle for memory has a lot of legs, and 3 to 5 years is very realistic, if not longer.
Yeah, the other thing with it too is that unlike, so like right now, everyone is afraid that, oh, in the future, you know, like these TPUs are going to become, you know, a bigger part of the CapEx spend. Then you've got like Meta coming out with like the jalapeno chips that OpenAI was like, you know, deifying the other day. You've got Broadcom and Marvell and AMD. No, what did he say?
He specifically addressed it. He's like, good, he's like, I don't think it matters. He's like, it was on Kramer, because Kramer straight up asked him and said, you know, if somebody did that to me, I would take it personally. He's like, no, it's all good. Yeah. We make the best chips.
It's not, bro. Screw that shit. Jensen is pissed as hell, bro. But I think Jensen is playing it smart by saying, look, I can use my balance sheet to lock up all the supply, because the thing is, this is what the situation is happening. Okay. And people in the chat, I'd love for you to comment on this, because I think I want to get your feedback. You've got GPUs with NVIDIA. Great. Amazing. Then you've got TPUs with Google. Then you've got AMD doing their thing. You've got Marvell working with other guys to do other things. You've got Cerebras doing it. All of these guys are doing all of this extra stuff, right, for the compute. The problem is memory. all of them are facing memory bottlenecks right now. So this is where I think the real opportunity, believe it or not, is actually memory, because memory got bottomed out and now all of a sudden is probably going to be able to extract even more margins. And now the biggest bottleneck for these guys is memory. So what does that mean? That means that Micron can say, listen, I know last year's price was X. I want 3X for any compute capacity for the next year, right? Or even like the next 5 years. So I think that visibility, that increase in visibility, will probably mean that there will be people that are comfortable enough to buy Micron and SK Hynix and Samsung where they are today. So as I'm bullish on NVIDIA, don't get me wrong. I'm just more bullish on the memory trade right now being a great mean reversion bounce back to the 1200s. Does that make sense, roughly?
I mean, I've been saying Micron's undervalued. I actually put a buy rating on it on Seeking Alpha last month because I think it sold off way too much. Matt, what do you think?
With respect to Micron, yeah, I mean, I don't think that we're out of this circle yet. And inflation is just going to continue. And from what I'm seeing, people are still willing to pay up for it. And based off of what Jensen said, if this is true, even today's prices at which they're buying GPUs, the rate of return of those are still, or the payback period is still within a year. And if that's the case, we have yet to see, I think, the end of this bull cycle. And unless some other sort of financial or macroeconomic headwinds transpire, I just don't see. I mean, if you ask me, if I could get an investment in less than a year, rate of return, payback period, I would do it hands down, right? And so it just doesn't make sense to me at what point. And so being able to trickle down and feed the additional memory costs down, it's probably just going to be a piece where every quarter or every 6 months they just continue to top up and top up and top up. And unless you get a massive increase in total capacity with respect to memory, it's just going to be something that continues. And I think they had some really good color on that with respect to the Q&A section about how originally things were, a couple $1 billion for a gigawatt. Now they're talking about $60 billion for build out costs for a single gigawatt of factory, of which a lot of that for Vera Rubin ends up going back to NVIDIA, like 50 to 2/3 of the cost if they're outfitting with NVIDIA chips, it seems like. So I don't know. And a lot of that, obviously, capital goes towards memory as well. So I don't know. I'm bullish on it. I think that there's still an opportunity. I took a private placement in a memory thing. I can't obviously talk about it until it's potentially closed and announced, but that's part of the reason. I mean, I don't see this cycle ending anytime soon. And so any ability to continue with, obviously the discussion today was a slight drop in gross margins because of the cost of memory. But if you're able to shave off, a couple percentage points, it's going to be massive. And the opportunity for investing in memory is going to be key here.
Yeah, I just wonder why everybody still, not everybody, but a lot of people still just don't want to believe the smartest people in the room. And the smartest people in the room are not at one company. You're talking about unilateral across all of the CEOs and all the companies that actually are shaping how technology is utilized. And the bear case just, and I'm not saying that the market's going to infinitely go up, and I'm not saying that we aren't going to hit a recession at some point. I'm not saying that we aren't going to go down at some point. But to think that anybody, including myself, knows better than the combination of Jensen, Jassy, Sundar, Zuck, Nadella. I mean, it's really hard. Elon, throw Elon in there. It's really hard to fathom that all these guys, they are captains of industry. They're the ones shaping technology. And yet we have people debating, trying to contradict what they are saying and what they are putting up on numbers. And I just don't think that's the right way to look at this. I think we need to look at this as, yes, at some point the growth rates are going to slow. But what does that slowing growth rate translate to with profitability? And what does it translate to with buybacks? And what does it translate to with earnings? And at what point does it go negative? Is it 3 years? Is it 5 years? Is it 7? Nobody knows. Let's just call a spade and say these numbers are incredible. And for right now, it doesn't look like this is stopping. And these companies are going full speed ahead because there's no evidence that they're not. And I think that's what the street really needs to battle, because there is just no evidence. I mean, we look at what NVIDIA returned this quarter, 26 billion in a quarter, 20 billion in buybacks, 6 billion in dividends. They are now doing Apple numbers of return of capital. 60% of free cash flow is returned. They got 99 billion on the buyback. And the guide for next quarter was incredible. They gave a guide for the end of the year. It was incredible. I mean, it's really hard to say anything that is contradicting what all these CEOs are saying.
Take a look at this real quick, just from the technicals on Micron real quick. So this is the technicals for Micron. So you can see like this was the near-term peak, and you can see like MACD was just really up there, and you can see that it started to kind of move down, and this was that Leopold move down where everything was like forced selling. So you saw these continuous candles going back and forth, and this is where everything bottomed out, literally July 29th. And since then, MACD's been crossing over and has been going higher. It's after this NVIDIA news, I think this thing is going to bounce back again. This is literally Micron is sitting at that 50-day average. And this is where I think multiple times it's bounced before. So that 50-day moving average, I think it takes it out. It probably moves closer to that 1,200 by the end of the year, which is exactly where my spreads are. Someone was asking me, Chris, where are your spreads? 900 and 1,250. You know, I got them for a good price. Let them do their thing. And, you know, everyone's like, oh, Chris is going to pump his bag. Yeah. If I see opportunities to take some short-term, you know, mean reversion, I'll take it all day.
I mean, man, NVIDIA's at 221. It's still going right now.
Yeah.
You gonna trim it all, Steve?
No.
Just curious.
That's what they say, man.
0% chance of me trimming anywhere before 275 or 300.
If the music is playing, keep dancing. But I'd say, Steven, keep your ears on, man. Like, just keep listening. I would say right now is a great time to keep your eye on the prize. Be long, but understand that if things get way overdone and there's any news of a possible slowdown from whatever reason.
Let's put it this way. This goes to 350 in the next 2 months because of the upgrades.
NVIDIA going to 350?
If NVIDIA goes to 350 in the next 2 months, because you got to think that we're going to get upgrades tomorrow and the next day, right? If this thing goes parabolic, yeah, maybe I'll trim. But at 221, this thing is still trading at like 14 times forward earnings, maybe even cheaper after the new numbers. Like, this is still so cheap.
Yeah.
350 would be an equivalent of 8 trillion market cap, 9 trillion?
250?
350.
No, 350.
350. Yeah, something like that.
Yeah, I don't know about that, Steve.
No, I'm just saying, like, that's where I would start to think, well, maybe it got a little overdone in such a short period of time.
But at that point, you're talking about like an entire continent's GDP.
Right. But I think fair value is 275. I don't think fair value is 221. This thing is trading at such a low multiple. It continues to trade at a lower multiple than it ever has because the earnings continue to grow and share price is not following it. And we're going to find out what happens. The neo clouds are going to do well.
You can't say that though, Steve. You can't say that though. Because they're no longer, like, next year, they said they were going to grow at 70% year over year, right? That's still a slowdown. That's not, oh my God, they're accelerating, they're maintaining 100%.
70% in a supply constrained. And what I said is they're trading at the cheapest multiple that they ever have. Multiple on earnings, not revenue growth. If you look at their earnings compared to where they've traded, it keeps getting cheaper because the earnings keep going parabolic. And yes, 70% is a slowdown, but nobody should be scared about that. It's the wrong way to think. if they come in at 450 billion in revenue now, 70%, I mean, you're talking about another $250 billion of revenue in a year at better than 50% net profit margins.
Yeah, but
Like,
they're
there's
also
nothing to be worried
they're
about.
also loading up on liabilities too, which is not exactly like the most like, oh my God, this is the greatest thing on the planet. Like that, I know people are gonna say, no, this is not circular financing, blah, blah,
Not.
blah.
It's not. They addressed it on the call, straight out. They addressed it. They called all the bears out about the circular financing.
What did they say? What did they say about circular?
Well, we should probably listen to it and find out.
Let's listen to it. Let's listen to it. I can pull it up. I'll pull it up here to share my screen.
Pull out their CFO addressed the circular financing.
So while Chris is doing that, Chris or Steve, why sell it all if you can get that sweet dividend now that NVIDIA is a massive dividend player?
No, I'm only saying if it goes to 350 in 2 months, then I would consider selling. But like, I have no interest in selling this anytime soon. Like, this is a winner, and this is something. You know what? If this doesn't go to like 250 tomorrow, maybe I buy more. Like, this is something where I like, you know what? This is the one thing that maybe we press.
Buy more Micron. Pump my bag, Steve. Screw NVIDIA. Micron, baby.
You want me to dump money into Micron.
That's right. Get into my spreads, bro. That's the way to go. This is the way.
Frontier AI labs have extraordinary demand for training and inference compute, but they are growing faster than what their balance sheets and credit profiles can support. They have rapidly growing customer demand, yet still lack the decades-long infrastructure contracts and investment-grade financing capacity needed to secure the AI factory infrastructure independently. In other words, their growth isn't limited by their technology or customer demand. It's limited by compute. For these companies, more compute means more intelligence, more users, and more revenue. NVIDIA is needed to help power this flywheel. First, we've invested nearly $50 billion in the Frontier AI labs. This was a meaningful commitment, but it represented a small fraction of our expected free cash flow over the same period.
Pause it.
Further, to support the Frontier labs in
So search for circular, because she straight up talked about circular financing. It's in the paragraph. OpenAI's existing and planned
right here. This one. Yeah, right here. The essential economic circular financing. Okay.
Here's the essential economic point. The LPS commitment secures a long-lived AI factory site, while the NVIDIA compute within the data center can be upgraded repeatedly. This project deepens our long-standing partnership with OpenAI. OpenAI has committed to substantially deployments of NVIDIA AI infrastructure through 2030. OpenAI's existing and planned commitments represent approximately 12 gigawatts of NVIDIA compute. For another Frontier AI lab, we will provide selective credit enhancement for nearly 2 gigawatts of compute. This complements the substantial NVIDIA compute capacity.
Right there is the word that scares the shit out of everyone, and which is why the market's CDS are climbing. Because they said selective credit enhancement. Credit enhancement is we're co-signing. We are taking on liability. All right. If NVIDIA didn't do this and they just had pure demand, it'd be one thing. But when you're layering on risk, you kind of have to be a little bit cautious. I'm not saying that they're like the quote unquote, the bears are wrong or they're right. But this is one of those things where, you know, if someone is signing up, more co-signing on deals, it's not healthy. You know, sorry, go. Let me just put
capacity they've secured independently without NVIDIA's credit support. We recognize the scale of this support, and we know some will call this circular financing. We see it differently. We're going through a major computing platform shift, the creation of one of the most important technologies in human history, and these are once-in-a-generation companies. Their technology leadership is proven, and their customer traction and usage are skyrocketing. We expect them to become the largest technology companies in history. We believe these investments, measured against the strength of their demand, the business they create for us, the ecosystem they build on NVIDIA's platform, and the equity returns on our invested capital will be excellent. And our risk is limited. The NVIDIA compute platform is fungible and durable and can be redeployed to support other customers. For context, we expect demand from the AI labs, for which we expect to leverage our balance sheet to contribute toward roughly a quarter of our business next year. This remains compute we ship will be consumed by investment grade customers or those that are backed by one. In Q2, we shipped less than 1% of our total data center revenue in Hopper 200 products to customers based in China in accordance with the US government licenses.
Okay, that's
Yeah, you get
Current-
stuff.
Yeah.
So the big thing with her addressing this is the equity returns on our invested capital. These are not bonds. These are not NVIDIA lending money and getting interest with a promise to be paid back. NVIDIA got straight equity for every dollar they invested in these companies. That's why this is not circular financing.
Well, no,
That's
50
financing works.
50 billion they invested directly into OpenAI and Anthropic. Like that's not a false statement. The problem is they're signing up for liabilities that are like way more than that. You know, so they're not getting an economic return for signing on the bottom line. What they're doing is they're saying we will take on the risk.
Right.
And the reason why we're taking on this risk is because if OpenAI and Anthropic with their current business go to the banks and say, hey, I want to borrow money, the banks are going to say, yeah, we'll lend you money, but it's going to be at
A
loan
much higher
sharp
rate.
rates.
Oh, yeah.
Right, because we don't trust your business model. This is
Mhm.
NVIDIA making a bet saying, we want this flywheel to continue. And the only way OpenAI and Anthropic are able to keep spending on their RPO commitments is by having us back them.
100%, but it's two different things. The one thing has nothing to do with the other. It's not circular financing if NVIDIA is backstopping it to a degree because no money's coming out of their pocket unless these companies fail, and there's no guarantee that they're going to fail or not going to be able to pay the loans. That's not circular financing. That's you co-signing for a car loan for me. That's not circular financing. You didn't give me any money. You are only on the hook if I default.
Right, but the problem is and this is where that fungible like term comes around, and this is the exact business model that the dealerships use for their own internal financing. The difference is they're actually collecting interest to offset the risk. These guys are basically saying we'll take on the risk as long as you keep buying our premium price chips. I mean, here's the thing. If NVIDIA really wanted to quote unquote be nicer about it, they could say, fuck it, our gross margin, lower it down to 40%. And these guys can afford it. Their ROI makes a ton of sense. Let the trade continue. They're not doing that. Why?
You lost me there.
Yeah, you lost me.
Okay. Okay. Imagine right now you have a bunch of customers, right?
Mm-hmm.
They need to spend money. They need to go to the banks and say, hey, listen, I need this money to borrow this car. And that car is going to generate me X amount of return. Okay. The bank is going to say, okay, what does your current spend look like versus your current income that's coming in? Now, if your spend is super high because you're buying a Mercedes to deliver pizzas, the banks is going to say, no, I'm not going to give you a loan. But if you lowered your price of that car from a Mercedes price to a Toyota price, the bank is going to say, your unit economics are just fine. Here you go, OpenAI. Here you go, Anthropic. Here's the money.
But they're already in a supply constrained world. So why would they do that? I'm not following.
Supply constrained how? They're only supply constrained because NVIDIA is creating the supply constraint right now by charging so much.
No.
Yeah.
No.
Yeah.
No. That's
Yeah,
not why,
I'm telling
Chris.
you.
They physically can't make more chips.
They don't have enough chips to supply the demand. That is what supply constraint means.
I don't think that that's the right. I don't think that's the right
Every
Hold on.
every
All right,
CEO.
Give me some rep here.
Mhm.
Jensen literally on the call said, "We are in a constrained world. We only have the ability to supply 70% of the current demand. Therefore, if they had the capacity to supply more, they would." Right?
In addition to Andy Jass
No,
and in addition to Sundar, both saying on the conference calls that they were not able to stand up as much data centers because they cannot get access to chips that they need. That is a
no,
supply constraint.
this is a sort of a chicken. What came first, the chicken or the egg? It's that question. Their
Is it?
only supply
Is it though?
it is. The reason why they are the reason why we're supply constrained with regards to chips is because on one hand, you've got literally the hyperscalers all building out at the same time with economics that don't make sense. If right now the economics made sense, right? You wouldn't need to have NVIDIA do all this extra shit. Right now, the build out is happening because everyone's like, oh yeah, you know what? We'll just spend the money. But here's the thing. If you actually did the market price of NVIDIA without these backups, OpenAI and Anthropic would have said, you know what? We are not going to spend as much. We're going to elongate the cycle, and we're actually going to raise prices on that token compute to have the market support what the current actual demand is. So right now you've got OpenAI and Anthropic subsidizing the, like, here's my question to you. Do you think OpenAI and Anthropic are making money right now? Like profit wise?
I mean, there's no way to know. We don't see the books. They're not public.
Right, but I'm just saying,
way to know.
what do you think? Do you think that they're making money?
I would think that OpenAI, I would think, is losing money.
Right.
I have no
Clearly,
idea.
they've said they're losing a ton of money, right? Why are they losing a ton of money?
Because they're spending a ton of money, and they never said they were going to make money before 2030. And
It's because they're not. It's because they're not charging enough to make that money back on the spend.
It's because that they are front loading everything they have to spend to build out their company. These are the biggest spends.
Right, but why can't OpenAI? Well, why can't OpenAI say, you know what, it's going to cost $50 per million tokens?
Oh, they could, but then they would lose the competition, so they can't. They can.
What you're saying is they're choosing to lose, right? Because they're saying, look, we don't
choosing to be competitive in a marketplace that is run by competition. If they were the only company out there doing this, they could charge whatever they want. But because Anthropic and Gemini and Grok are out there, they can't go over the top unless they have a superior product, which they don't.
Right. So you're basically saying and what is OpenAI doing instead? They're building out more and more data centers. They're saying we want to lose even more money in the future by building out these data centers.
Or is it that they need to build it out to make a lot of money in the future? Like, you can't say that they're building this out to lose more money in the future. Yes, they're going to spend a lot more money to build these data centers. Nobody's questioning that.
This, in my opinion, is
fortify their business to turn a profit in the future.
This, in my opinion, is heavy levels of subsidization by everyone in order to get as much market share as possible. Because once you get market share, you have a dominant position to ask for anything you want in the future. That's the problem that you have right now with the AI trade. Everyone is saying, oh, I'm supply constrained. I'm supply constrained. Yeah, because you're selling shit that costs you $10 for $2. That's why you're supply constrained. If you were actually charging, let's say, a 40% margin, you were charging $14 for something that's costing you $10.
No. Don't you, Chris, you know better than that. Don't do that. Don't do that.
I honestly,
you know how to read an income statement. Don't do that, because there's a big difference between cost of goods, COGS, and operational expenses. There's a lot more components to running a business than just producing the tokens. Don't do that.
I'm telling you right now,
you know better. Come on.
AI right now is being heavily subsidized by all the hyperscalers, by investors, by private equity, by all of this stuff to keep this.
How's it being subsidized? It's not being subsidized
because OpenAI and Anthropic are not necessarily making a ton of cash flow on what they're selling.
They don't have to. They have the cash.
Why don't they have to? Why don't they have to?
They have the cash on the books to burn. They don't have to.
Because NVIDIA gave it to them. That's the definition of circular financing.
Invested. They got equity. Okay.
Invested. They got equity.
Equity on the books. And,
Look, if
and,
OpenAI, yeah, go ahead.
and they also did funding rounds and took other people's money for equity.
They got the money from their own customers.
Fritz, have you ever done a private placement? I know you have.
Yeah.
Right. Okay. Are the companies that you're doing private placements in making money?
They are, but they're not asking me to buy their shit. They're not saying to me, Chris, why don't you give us money so that we can pay you because we're going to be your customer?
Chris, you know so much better than this.
Steve, I'm telling you,
they are not going to make money right now, and you know that.
And why can't they make money? Why can't they charge look, if we are truly supply constrained, if NVIDIA, if OpenAI and Anthropic were quote unquote, like you said, super supplies constrained, right?
Yeah.
Why don't they charge $100 per million tokens?
They can't. They legitimately cannot, because if, let's just say, Anthropic and OpenAI.
Why? You just said the demand was unlimited, right?
But if they charge more, now with Grokbot being able to code, you have a real alternative, and that will get an inflow of those customers. Those customers are not going away in the AI realm. They will shift products. So they have to stay competitive in the market. And in order for OpenAI to catch up to Anthropic, they know that they have to spend more. In order for Anthropic to catch up to whatever OpenAI is going to do, they have to spend more. And Gemini, for that to get better to actually compete, they have to spend more. We know Elon's spending, and we know Grok has gotten better because he wants to compete. And these companies, put Google aside, is that they're a much different beast. But Anthropic and OpenAI, nobody expects them to make money right now. And they have the cash on the books to fund the build out. And when they go public, they will take in an even bigger inflow. And nobody expects them to make money. Now, in 5 years from now, if they're not making money, that's going to be a very big problem. But right now, it just doesn't matter. And they're building the businesses. It just so happens that these are such capital intensive businesses that people are getting worried about how much they're spending. But if they're spending this type of money to turn a profit in the future, Tesla and SpaceX, they trade at crazy valuations. Tesla's profitable. Has Tesla ever generated all the net income to match all the CapEx that they've spent? No, they haven't. Has Amazon? No.
Amazon, I think
think about Amazon. Think about how much they've spent on CapEx. Have they ever?
Too many people try to use the Amazon as an example, as, oh, they were net income losers for like 12 years and everyone didn't believe in it, and then eventually they became, one of the most profitable like cloud players and blah blah blah, all that stuff. I get it. I totally get that. Right now is a knife fight between Anthropic and OpenAI and Gemini and Meta's thing, and then the Chinese guys, all of this shit. We don't know who the clear winner is. But NVIDIA is like the arms race, the arms dealer, basically making sure that players don't drop out. Because if any of those players drop out, they start to lose business, and their growth rate goes down significantly.
Hold on. They can't drop out, because if they drop out, they automatically lose everything they've already spent. They don't have a choice. They can't drop out.
Exactly. That's the problem in the future, unless you're saying OpenAI and Anthropic are guaranteed to be the winners.
This isn't Pepsi, where they can get rid of one line of soda or get rid of one line of the chips division for their food. Like, this is these companies' only products. They don't have a choice. This is the business they went into. And in order to compete in the future, they have to build it out now.
And Steven, that is the risk that you're running into. OpenAI has committed to $1 trillion of compute. And then you've got executives leaving at the same time. What does that tell you?
Oh, I've never said that OpenAI is a great place to work. And I've openly said that Anthropic's the one I'm buying. I'm not going to buy OpenAI.
I would say
the management leaving is a big problem for OpenAI. Nobody can say it's not.
And even Anthropic, like I said, once we get all of this to come out, the real winners of all of this, in my opinion, are probably going to be companies like Palantir, companies like ServiceNow, companies like Salesforce. Why? Is because they're sitting at the application layer, while these guys are the commodity layer. And right now, yes, the commodity is in super high demand, but I can guarantee, just like how happens with any commodity cycle, engines get more efficient. Okay. I think eventually we get to a point where the demand gap is not, NVIDIA is just basically guaranteeing all of this expensive compute that these guys have. And the real value of the tokens actually end up getting expressed into the market. And that's where your problems start. So I would say keep an eye on OpenAI and Anthropic. If you see any material weakness on OpenAI and Anthropic and them not being able to live up to their RPO guarantees, this whole thing, dead in the water.
If they can't live up to their RPO guarantees, we're going to have problems. There's no question about that. Matt, what do you think?
We're supply constrained.
Yeah, I mean, dude, the guy selling is not going to tell you like, yeah, we've got an abundant supply. Don't worry about it. We'll still be able to get margins. Of course, Jensen is going to say we're supply constrained. You know, they're supply constrained because you're basically subsidizing your customers. Oh, if I run a Toyota dealership and I'm financing my customers and I say, oh my God, the cars are through the roof, like I'm making all these sales. Yeah, but that's because you're basically paying for your customers to buy your cars.
NVIDIA is not financing them though.
NVIDIA is underwriting the loans that people buy. So that's literally almost the same thing.
Only in the event that they default.
Exactly. Let's play that game. Let's play that game and see what happens in 2 years.
So right now, nothing's coming off the balance sheet.
Nothing is coming off the balance sheet. The problem is now the balance sheet is loaded up with liabilities. They're using the cash flow to buy back shares. So then what happens?
Let's pivot to something you said. SaaS is back, baby.
SaaS is back, baby.
SaaS is back, baby.
Application layer all the way. Application layer, baby. That's where you know what?
Everybody who said SaaS is getting vibe coded away, everybody who said that we didn't know what we were talking about, I am going to take the victory lap. I am going to take it. Okay? Everybody can go F themselves. Family-friendly show. I won't curse. But everybody can go F themselves. Okay? Because I'm going to speak for myself. I have explained the compliance side. I have explained the auditor side. I've explained the implementation side. I have lived all of it with these exact companies. I've explained time and time again why CEOs and CFOs and COOs will be on the chopping block if they make a wrong decision with exiting an enterprise software platform for something that was vibe coded in IT. And all these Twitterverse people that tried making up this vibe coding thing is going to vibe code away ServiceNow, Workday, Salesforce. It was all bullshit. It was always bullshit. You're seeing it in the numbers quarter over quarter. And I think we're finally hitting a true turning point. And the turning point for me wasn't ServiceNow's report. It was Silver Lake potentially acquiring Workday for whatever number it was. And then Salesforce validating everything with the numbers they put out this evening. Everybody was saying, well, with all these tokens, people are going to vibe code away. What about these companies that legitimately have blank checks? Oh, you think ServiceNow can't just write a blank check for tokens and compete? Oh, you think ServiceNow and Workday and Salesforce aren't layering in AI? You think they don't have these products? Like, come on.
I think if you own the customer relationship and literally that depth of knowledge and that proprietary, like fundamental understanding of the actual business, aka ontology. Oh my God, I can't believe I fucking said
just said ontology.
I hate the fact that I just
don't worry. I will not clip it. Don't worry.
Okay, that means you will clip it.
No, I'm not going to clip it. Don't worry.
Okay, yeah. If you have that, you basically are in a very, very strong position not to be replaced by some dickhead. I'm sorry. I need to stop here. That just comes to your organization and says, hey, I can build you a Salesforce. I could build you a Workday and basically code some BS that one can't be addressed for security at the same level as these guys who've got like literally the deepest moat around the regulatory area, the cybersecurity portion, everything literally for decades of relationship building and all the how not to do things and how to do things. It just, the idea that SaaS was somehow going to just up and leave and then there was going to be seat compression. And I'm like, you guys realize that AI is just going to add a level of value on top of what they already have. And most of these guys end up going to go into a hybrid model where you're going to get an entry level seat, like per seat price, but then you're going to have a consumption model where basically the companies themselves charge you like, okay, you use this much AI, no problem. Here you go. We buy wholesale from OpenAI, Anthropic, and whatever, and we sell it to you for retail. That's a great business. That's a great business.
Matt, I want to get your thoughts. I just want to say one thing because there's a comment I have to address. Yes, Salesforce customers have other options. There's no question about that. And yes, the gap left for Zeta. I'm fully aware. What I am also fully aware about is Salesforce raised their fiscal year guidance to $46.1 billion to $46.4 billion, up 11 to 12% year over year. And the remaining performance obligations were up 11% year over year, $66.3 billion. So yes, customers have an optionality. Customers can switch. It's no different than if you're going from a Paycom or an ADP and an HRIS to a full ERP suite to a Workday, SAP, or an Oracle. It's no different if you don't like Oracle after 10 years and you go to Workday. Customers have choice, but these companies are still growing. Look at the underlying numbers and look at the RPO. Salesforce is growing. You may not like the product. You might use it at work. Guarantee that it's a lot harder to change than somebody voicing their opinion. Matt, what do you think about SaaS being back?
SaaS being back. Well, before I give my thoughts on SaaS, I've been pretty quiet in the background and really just trying to understand where Chris is coming from. I don't understand where he's coming from in a lot of this. I would just encourage you, Chris, as much as I love you, to just have a good conversation with ChatGPT or Gemini about the return on investment in some of these things. They're outlaying $45,000 per chip. The revenues that they're getting are anywhere between $35,000 to $45,000 a year. The OpEx is pretty light, and so even on a fully equitized basis of buying these chips outright, the return on investment is going to be within, the payback period is going to be within 2 years. And then if you start actually levering, which is what a lot of these companies are doing, right? They're taking out 30, 40, $50 billion worth of debt. The IRRs jump up from the 25 to 35% range all the way up to 50% plus. And so, it's I'm just kind of curious as to why you think a lot of these guys aren't actually making money on an ops income basis with respect to this. It makes sense at the moment, even still with the value of some of these items going down, say 20% per annum. I mean, a lot of these large language models that you're able to get now, like Opus and things like that, you're charging $25, maybe even more per million tokens, and you could be making upwards of, in revenue what it costs per the first year to purchase. So with respect to SaaS being back, I mean, it's hard to say that you're going to leave a company that has had decades in a brand versus creating something internally that might be made without, like you said very brilliantly when you had the conversation with Chad on basis points, without all the SOC compliance, without all the regulatory check throughs, without all these different things that maybe you don't even want to have internally. Like, you have to think sometimes it's good to be able to offshore these things to third parties or provide or have third parties doing them, because then you're not liable for a lot of these things. You want to be, in a lot of these cases, the expertise or the expert within your individual industry. You don't necessarily want to be worrying about CRM. And me, as an oil and gas guy, I don't really want to be worrying about health insurance. I don't want to be worried about CRM. I'm going to hire people in IT to be able to build those things internally, maybe for some of the things, but not necessarily the things like Workday and things like that. My capital, instead of providing it internally, is better maybe to just, if you think about it, invest in something like a GPU that's able to get me 30% IRR than trying to save a couple dollars on my op expense. So anyway, that's just kind of my thought. I think SaaS has never been dead. I think there's just a lot of people that are spooked right now. And I think also a lot of people are starting to just be fearful of software companies in general, just because a lot of the free cash flow margin has disappeared. And I think, unfortunately, some of that also has just been unfortunately also attacked with SaaS, which I just think has been something that's wrong in general. I mean, that's the reason why I sell ServiceNow puts. I haven't sold any CRM puts, but wouldn't have been stupid to sell CRM puts either. I mean, just ServiceNow below 100 was fucking stupid. So anyway, just some food for thought there. I'm a firm believer that these companies are going to continue to do well, and they have dozens of tens of thousands of engineers creating new products to be able to create that stickiness. So,
Yep.
Yeah, look, the idea that SaaS was dead was so overdone. It's one of the things I get annoyed about in this day and age. That would have never happened 10 years ago. But because of how connected everybody is, that narrative actually caught fire. Like it really did. That would not have happened 10 years ago.
That's not true. We've always seen that, though.
That was a Twitterverse thing that caught fire. That would have never happened 10 years ago, because all these people would not have been able to start this vibe coding away. That wasn't started in the analyst community. 10 years ago, FinTwit wasn't a thing.
We've seen these cycles so many times, though. Like regional banks are all dead, and then a year later they all come back. You know, after they're like the Fed steps in and basically guarantees their AOCI losses, and so that's fine. Then the market recovers. Then you had the scare with the health insurance companies who are all ripping. Right, last year we had the same thing. Like somehow no one was going to get health insurance anymore. Like it just, I feel like these waves of catastrophic terminal decline in an industry, they come in and they get really, really worked up. And the thing is, if you look at their business models, they're usually like up and to the right. And most of the time that they go down is typically like margin compression, but that margin is literally a temporary compression. So the unfortunate reality is a lot of people are going to say the same thing, in my opinion, with regards to the semiconductor business and say, look, you know, the fears that the cyclicality are overblown, but I'm going to disagree on that. I think eventually the cyclicality is going to hit. I just don't know when it's going to be. And I think the cycle just keeps getting elongated. You know, we'll see what happens.
Yeah, eventually it's going to go into maintenance mode. We just don't know when it is. And that's always the case. I mean, I think you remember probably now 2.5 years ago when we had that conversation with Amit privately, and I was saying that I think that this lasts 18 months and I want to get in, have a good 12 to 15 months and get out. And then I kept moving my target because the spend kept going and going. And I'm not seeing anything where I get worried until at least the back half of 2027 when we start thinking about what does 2028 look like. So I think we got at least 4 good, real solid quarters before we have to really start thinking about, okay, is 2028 another growth year, or is this a maintenance mode year? And are we going to have enough energy to power all this? Is that going to be a bottleneck? And I think that that's something that does not get talked about enough, with how much more natural gas we're going to need, what the grid capacity is going to be, and are they going to be able to stand up enough infrastructure to support these data centers?
Yeah, I'm not in last. Someone's like, is Chris in last place? No, Chris is not in last. Chris is in the middle, you know, and believe it or not, I'm in the middle because I got too bullish on the AI CapEx. I thought we had another 6 months and we didn't. Me, Jason, and Amit got destroyed because we had a lot of AI exposure to the AI CapEx, which now with the draft coming along, we may actually be in a better position to capture that. Captain Sleepy Time got mostly SaaS, so he ended up actually doing really well.
Dude, have you looked at his portfolio?
No.
It is so ridiculous. Like looking back,
right now,
the fact that he had last pick, okay? Look at what he accomplished with last pick.
Yeah. I mean, that's because we all got into the AI trade continuing, right? Which, believe it or not, at the time felt like the right move, but he went contrarian, and that ended up helping
His
him.
picks were taken. He wanted Broadcom. He wanted NVIDIA. He wanted CoreWeave.
Yeah, we targeted all of the stuff that he wanted because of you. You were the gang leader. You destroyed us, Steven.
It's not
Steven, I just want to let people know. Steven is the one that suggested that we ambush Tanner and take all of his picks. Okay. Basically, like Tanner wanted NVIDIA, right? And NVIDIA hasn't gone anywhere, right? So Tanner was forced not to get NVIDIA. He wanted CoreWeave, but we took it from him, so he couldn't get it.
Well, I took CoreWeave and Broadcom.
Yeah, which the two that he wanted. You basically you helped him. You know,
he could listen. He could have taken CoreWeave first. That was my second pick.
Yeah,
he could have taken that first. He chose not to.
Yeah, Matt did good with his SpaceX short. That was bold of you, but it was actually the right move.
It was a great move.
Yeah, that's the second highest move up. So
Lambo,
I think you're gonna do well, Matt, going forward because you're second to lowest position. Micron.
Matty, I'll trade.
It's gonna go the other way.
Semi for Micron.
What do you want?
Which one?
Taiwan semi for Micron. What do you think?
No, don't do it, Matt. Don't do it. Microns will recover, man.
Taiwan semi is the biggest beneficiary of the AI revolution, baby.
Matt, do we have any cash in the portfolio? Let's buy some Micron.
All roads lead back to Taiwan Semiconductor because guess what? Micron's got to buy the wafers from them. NVIDIA's got to buy the wafers from them. Everybody's got to buy the wafers from them. They're the arms dealer of wafers.
Yeah.
It's all going to zero.
That means
Steve
Matt
got
doesn't want
Zeta.
Okay.
See, whoever had the most exposure to the AI CapEx trade got destroyed. Jason, yeah, Jason is his global foundries position is just murking his portfolio return.
Crazy.
I wonder how he's going to react to the quarterly update. I wonder how he's going to position himself.
I don't know.
I might go a little bit like if you go to mine, I might go a little bit like I'm gonna do more of a healthy mix, you know.
Are you gonna lock in your gains on Vive?
Probably. I'll lock it in for Viva. I'll let Now probably continue. I'll let Molina continue. Fluence is so bottomed out. That's the problem with investing in super small cap. Like this portfolio does not reflect my actual portfolio, with the exception of maybe like two of the names that are in there or three. But that's about it. I got cute. I'll be honest. I did not want to be in a position where I was going to have an entire like a portfolio that didn't have any momentum running the other way. So I kind of got a little too happy with trying to find the AI winners, and the AI bottleneck trade ended right after that weekend. That weekend passed and the AI bottleneck trade blew up.
Yeah, I mean, that happens. And look, it's only 2.5 months in. I was down in last place for like 10 months last year.
Yeah, and then Micron came in and just saved you.
So anything can happen. Let's close it out with Meta. Not as bad as I thought it was going to be. Now, I need to do a lot of research. I'm not sure if either of you did. Can any of these states come back and resue them? Or is this the payout of all payouts? Because you know what? Meta.
That's a great question.
If this is the payout of payouts at 18 billion settlement, then Meta's going to 750. I said it. Meta's going to 750 if that's true, because this is either going to be a one-time or they're going to structure it over 10 years. And at 10 years, 1.8 billion is a drop in the bucket. Even if it's one time, who cares? They can write a check.
I think Meta is trying to make sure they don't go to a jury trial, because I was listening to this one mom that was talking about how her daughter committed suicide after like all this stuff on social media about how she was depressed, and instead of helping her, the company was amplifying the ads that were being shown to her for like things like makeup, to like make her feel like she belonged. Like I was listening to it and I felt like a tear come down my eye, man. So I was like, woof, imagine being on trying to defend against a mom on the jury stand and like a jury of your peers, bro. The jury was being like, yeah, Meta needs to pay $10 trillion. I mean, literally, it was like one of the most heartfelt things I saw. So I don't think Meta wants to go to the to do a jury trial on this.
All right, I have the data.
Sure.
So they did not admit wrongdoing in the case, but agreed to pay $18 billion to settle the claims that Facebook and Instagram were designed to addict minors to social media. Of the $18 billion, 12.7 will be distributed to 48 states, Washington, D.C., Puerto Rico, American Samoa, and Northern Mariana Islands. 459 million will be paid to settle claims over the Cambridge Analytica claims, 2.2 billion to California, 1 billion each to New York and Texas. The settlement will be distributed over a 10-year period and can be used to fund youth online safety initiatives, et cetera, et cetera. States participating in the lawsuit will receive roughly 70% of the allocated payment over a 10-year period, with the remaining 30% released only after peers YouTube and TikTok implement similar guardrails, including a 1-hour daily limit, night mode, and age assurance measures. Additionally, YouTube and TikTok would each agree to pay a combined amount matching the 30% figure, which is 5.3 billion. This may be done. This may be like completely over.
See, this is like some of the people in the comment section. They're saying basically that it's the parents' fault for allowing this girl to basically, be put in that situation. The thing is, when you're in court, it's not necessarily like right and wrong. It's really about how you can sway the jury. There's been people that have been convicted that are completely innocent, but the case that was made against the person was so strong that that person went to jail, right? So right now,
be runaway jury, by the way.
Right. So right now, I could agree with some of these people saying, look, parents ultimately are the responsible party that should be, responsible for what their kids are seeing on Instagram and Facebook and all that. But that's not how the world works. We have to stay within reality. And the thing is, reality is, do you want to risk being in a room with a jury and that jury is now basically looking at a crying mom?
No,
I don't want to be in a position like that.
That's what I was saying on the stream the other day, that the last thing Meta wants is to go to trial, because you never know what the personal experiences are of all those jurors. Do they have a nephew or a niece that was impacted? Do they have a daughter or a son that was impacted? Do they have a prejudice against it? And while the lawyers and the prosecutors did their best job to make sure that it's a fair jury, you'll never know what people say when they're in that box to get on a jury. You have no idea. You don't know what the motives are. Last thing you want is them going trial jury. Matt, what do you think?
So there's still ongoing lawsuits, right? This was strictly a large majority of the states. So the school districts, like you stated, the individual claims, and then there's still a couple of states themselves that are still ongoing with respect to.
Matt, can you put the mic near you, because you're fading in and out a lot?
There's this is the majority of it, though. The big state ones was probably the majority of the potential exposure in terms of financials. So I'm curious to see what transpires with respect to the other ones, but it looks like the majority of it is done. But the thing that's nice to also observe about this is a lot of times these things are going to be paid out over years, not in a single impact. So in terms of actual ops cash outlay, if there is something like this, the 17 to 18 billion dollars that was just done, it's only going to be 1.8 billion dollars a year.
Yep.
So in that respect, there's no repercussions, no ability for those states to come back. So it looks like the majority of it is kind of mitigated, although it seems like there's still some potential exposure to be, another 10, 15 billion potentially, depending on what transpires with the individual. But I'm sure they're going to settle just like this one settled. So
yeah. The other challenge though, guys, is like when you have on one side a company like Meta who's making like $100 billion, it's a lot less sympathy than, let's say, you were like a small company and you were being sued on a class action and that would destroy you, right? So the thing is like, and this happens in court. I remember one time I got into a car accident. I was wearing like a lab coat from like the hospital where I was working. And the guy that hit me thought he was like, bro, he was made in the shade. Like, I just hit a rich doctor. And I'm like, bro, which rich doctor do you know? This like drives a winter green 1997 Toyota. That was a Honda Accord, like winter green Honda Accord from 1997. And this is like in 2008. I said, look, I'm not a doctor. And the guy said, what? You're not a doctor, but you're wearing a coat. I said, yeah, there's more people that wear coats in the hospital than just the doctors. So the guy said, oh, okay, we're cool. Because I knew like the minute he hit me, like he was just, oh, dude, I got a payout. And that's the challenge. So right now, Meta is in a lose-lose situation if they go to jury trial. The risk that they would have to take is too much. The settlement, if it's only 16 billion and it's over the course of like a series of years, bro, that's cheap. That is super cheap for
so
Meta.
cheap. So cheap and so bullish.
Yeah.
So, Chris, I found the clip circling on X.
Okay.
Jensen is such a gangster, by the way.
Yeah.
Well, the whole time I've been working on something, a chip that I think can really hurt you. It's called jalapeno. I don't know. Let's call it, tomatillo. And you said to me, well, that's fine. Would you really say that's fine? Because I personally would be hurt if OpenAI did to what they do to NVIDIA if they did to me.
I'm okay with it,
Yeah.
Jim. There's so many XPUs that are being announced. And as we know, it's not easy doing what we do. We've been doing this for 33 years. And so lots of projects get started, lots of projects gets canceled. We're here to support our partners, and we're going to build the world's best technology. I have every confidence in that. We're going to be the most productive infrastructure that they have. I have every confidence in that. We have the supply chain and the technology scale to be their largest supplier. I have every confidence in that. And so, I don't have to take anything personally because I've got so much confidence in what we're able to deliver. And look at all of the XPU announcements and all the startups that have been announced. And yet today, NVIDIA is increasing our market share of the AI market, where our growth is accelerating, our technology leadership is extending. And so I'm very comfortable with all the competition.
Okay, and I also
Such a gangster.
I mean, what was he supposed to say? Like, oh no, I'm afraid of competition.
It is just a master class in how to answer that question. Such a good answer.
I'm just saying, how else could he have answered it?
I don't know, but that was a perfect answer for it.
That was the only answer. That's I don't know why it's perfect. That's the only answer. We're not afraid. That's it. No. What was he going to say? We're scared. We're evaluating all of our options.
Yeah, he could have danced around it. He went head on and said NVIDIA is the best. I mean, I am very
confident.
Very confident.
Confidence. Yeah.
Confidence.
Going to zero.
Matt, everything's going to zero.
Going to zero.
So we buying space. Oh, yes. Anthropic and Salesforce. Did you see that, Chris?
Yes, I did.
I mean, did Benioff just get the blessing? Did he listen to everybody saying, you cannot screw up this conference call? Don't bring in your customers. Who did you bring in? Brought in Dario.
Mm-hmm.
I mean,
Claude Force.
right.
Claude Force.
Right. And so I guess Salesforce is getting vibe coded away, right?
Owning that customer relationship is the biggest moat that you have. Could Salesforce's growth slow down? Probably. But no, man.
Claude
I think
Plus,
this.
of course, baby.
I mean, that's why if you look ServiceNow, like you don't think NVIDIA could make their own ITSM and replace ServiceNow with the amount of money that but they're not interested. That's not their business. ServiceNow already owns what, like a 90% market share of the ITSM business around the planet. Like it's not going anywhere. Sorry. So CRM is the same thing. They're the largest, customer relationship manager on the planet. Dario's like, what am I going to do here? What am I going to try to build another CRM, try to hire 100,000, not 100,000, was like 40,000 salespeople to go out there and shill my shit?
Let me tell you something. I've been invited to Dreamforce. I've never went. I know people that have gone. It's crazy. The amount of salespeople that Salesforce has is absolutely nuts. I don't get it, but you're 100% correct. In order for Dario or Altman to compete, it would be a massive uptake. And let's not forget, Salesforce's customers are locked in for multiple year contracts.
Yeah. The thing is, Anthropic benefits from this relationship because they want to sell compute. They're not in the business of trying to create products to basically go and sell. So right now, by partnering with Salesforce, every time Salesforce has a customer relationship and says, look, we've got this AI feature powered by Anthropic,
right?
Anthropic makes money.
Of course they do.
And it's the same thing with ServiceNow. ServiceNow is doing the exact same thing, saying, look, we have the customer relationship. You give us wholesale prices. We charge retail prices. We make a margin. You get an inbuilt customer. You don't have to spend money on sales and marketing. We've already done that for the last 20 years. We built an entire platform. We already have all the security and supply features. That just means that you've got a nice hard, like, what is that called? A reoccurring revenue base that's coming in, and the market's rewarding all the SaaS companies that have that ability.
I know a lot of people don't like Salesforce, and I see the comments. Stop pushing Salesforce. Stop pitching Salesforce. Guys, Salesforce was down to $146 a share. It is now at $232 in less than 2 months. And it is likely going back to 300. Like, in all seriousness, it is still so undervalued. Understand what drives share price after the bullshit is done. It's called earnings. And Salesforce has it in spades. Okay. It is a mature company. It's never going to grow 30% year over year anymore, or 40%. But you know what it's going to do? It's going to continue to compound earnings. They've never had a year where revenue declined year over year. Go look at the income statement. Go look at the free cash flow statement. It is about finding value. Salesforce is a still value play, and it was a gigantic value play. So you can say, I hate Salesforce. It's a shitty product, blah, blah, blah. That's your opinion. That's fine. That doesn't matter. Like, what matters is the numbers. And when Salesforce was trading at 10 times free cash flow, you had to know that that was not going to sustain.
Yeah. Yeah, and the thing is, like, a lot of what we're seeing is just confirmation bias on some people liking or not liking it. Like someone said, nobody likes using Salesforce. Okay, like what?
Right.
Is that why 80% of the S&P 500 use Salesforce? Like, they like using a product that, they use a product they don't like.
And once again, I'm going to say something that I've said before. When a lot of people talk about that they don't like the product, my rebuttal is, were you the decision maker to implement the product? And if you weren't, are your gripes being heard by upper management? Because if they are not, guess what? You're sticking with Salesforce. And in a lot of companies, and I would know, people hate there's people that hated Workday when we implemented it, but we implemented it. And the people that made the decision was 4 people. Now, it was with input from about 30 in a 4,500 person organization. But if you think that decisions are made by bringing everybody together and giving everybody a say, that's not how business works. In a 4,500 person organization, Workday, which was one of the biggest tackles that we had to do on an implementation stage, if not the biggest, and one of the largest projects, only 30 people were in the initial phase, and that got weeded down to 4 people at the end. Because you bring in the subject matter experts that do your HR, your payroll, your accounts payable, your accounts receivable, your learning and talent, et cetera, et cetera. You don't bring in 4,000 people to make a decision. You'll never get anywhere. So keep that in mind when we're talking about software, that people's feelings are just feelings. It is not representative of what Salesforce is doing or ServiceNow is doing or Workday is doing from a revenue and earnings perspective.
Yeah. And ripping out a product like that and replacing it is extremely
It's
difficult.
crazy.
Extremely difficult. So like which services do you guys or have you guys used that you think are like indispensable to your organization?
Workday. I've
Workday.
said it. I should have bought it. I knew better. I felt some sort of way only because of how closely I've worked with those people. That's why I didn't buy it. But you can't not live without it. Whether it's Workday or SAP, you have to have. If you're a large company, you have to have it.
Yeah.
Like, and Chris, I think you guys use PeopleSoft, if I'm not mistaken. Same
Yeah.
thing. You have to have it.
We use PeopleSoft for our ERP. And the thing is, like, I was there when we first implemented ServiceNow at my organization. And I remember I was just like, oh, whatever. This is just like a ticketing service company, whatever. Who gives a shit? It's not really that big of a thing. But as I was working in my industry, I realized just how sticky it is, because now every server at my organization, everything is managed. Every piece of equipment that has like any sort of connectivity is managed by our ServiceNow. All of our do you know what a heartbeat sensor is?
Yes.
For any like piece of equipment. So you always have servers running constantly, and there's always these heartbeat checks. All of that stuff goes right back into our ticketing system. Anything goes down, we know way beforehand. Everything, like, we get to collaborate. All of our tickets are all in the same thing. You can go through literally like 5 years worth of data and search for resolution notes that could have fixed a problem that just resurfaced. Like, these are all the things that, like, I know, Matt, you've worked with a couple of these softwares as well, right?
Yeah. Matt, what do you guys use for your payroll and all that stuff?
I probably can't go into that, but I was going to say, gentlemen, it's been a excellent time listening. And I will see you guys on the next one. You guys have a good night.
Yes, sir.
All right. Have a good night, Matt.
Yeah.
Yeah, it's almost impossible. You can switch from one to the other, but you can't get rid of these products. Like, when you're a large company, finance needs accounts payable. They need accounts receivable software. They need general ledger. They need accounting. They need payroll. Like, those are just core business functions.
Yeah, a lot of small businesses, same thing. Like, that's where Intuit comes in, and they're just like, look, everyone is on QuickBooks. To get off of QuickBooks for so many businesses, it would be really, really rough. And that's why they have such a large market share, and they're just, every year they just come, they raise a little bit.
That's the one thing that I underestimated with Intuit was QuickBooks.
Yeah. TurboTax, I could see some level of disruption. I'm not even going to try to defend that one, because there's a lot of people that can just get by with standard deductions and free filing. But in terms of, like, if you're a small business, you're using QuickBooks. Like, there's very few alternatives out there that can match it. There are a couple, but so.
Yeah, I mean, I built my own, but I also have an accountant. So if I didn't have an accountant, I would probably be using QuickBooks.
Yeah, my accountant uses QuickBooks. I use Jira. Yeah, Lena says she uses Jira. Yeah, my wife uses Jira too. Like, she has a Atlassian. That was a crazy one too.
Dude, when I was at Bed Bath, we used Jira.
Really?
And that was like 16 years ago when I was at corporate.
Wow.
I mean,
yeah,
crazy that that's still around.
Oh, it is, man. I think this is the key, though. Like, I think SaaS will come back. The only thing I will agree with the bears on SaaS is that I don't think we'll ever really get to that 2021 level of multiple. Like some of these SaaS names,
Terminal value may be, yeah, you could be right on that, and I don't know that we will.
yeah, that I mean, when I look at those multiples that like some of these SaaS companies had during 2021, it was like, holy shit, how are they ever going to make like, you know, any manageable returns for shareholders?
Sure.
Unless for like at least like 5 to 10 years. So you were paying a 10-year price in 2021 for a company that hadn't even produced that kind of earnings yet. But then just how the market gets way overbought, they tend to get oversold as well. And I think that's one of the great things about the SaaS companies right now, that I think if you're looking for durable compounding, SaaS is still a great place to be.
Oh, I agree with that. It's just you got to buy the right ones. And I think there's a handful of ones that are great, and some will get disrupted. Look, customers leave. There's no question about that. It's just with certain ones, it's just so much harder to leave. Like with Workday, after a 5-year contract, the cost to leave, and that's the other thing that a lot of people don't think about. I had resources at our disposal. Okay. Resources, like real resources. We still spent 7 figures on implementation through a consultant because you have to. Like if you just do any search on Claude or ChatGPT and you ask them what the typical, I mean, I can do it and show everybody what the typical implementation time frame and cost is. It is expensive and it is time consuming. And I don't know of anybody, like when I did my vetting process, not a single person I called said that they implemented it on their own without consultants.
Yeah. No, you need an army of consultants, man.
Yeah.
Anyone in health? Is there anyone in the chat or any of you guys work in healthcare and you had to do an Epic implementation?
Oh my God. So I'm familiar with NextGen, but I've looked at Epic. We wanted to go with it. It got shot down because we didn't want to spend the money. But yes, I know exactly where you're going with that.
God, if I never have to go through another Epic implementation, I will thank the Lord. I will never, like, I cannot imagine my hospital ever getting off of Epic now.
And Epic's the #1 software, period.
Yeah.
But let's just say there was something comparable, right? Not only do you have to pay for 2 softwares, because it's not like you sunset Epic on the 30th and on the 31st, you go with ABC. You have to carry both costs during the implementation phase. That's the other thing. Like it's so expensive. Not only do you have to pay consultants, not only do you have to tie up your staff with time and overtime, you also have to carry 2 products for a duration. So it is not freaking easy to do large scale software implementations. It is just not.
Yeah, just the thing with I'll answer a couple of questions in the chat. Number one, you cannot buy into Epic because
private company.
They're a private company, but more important than that, the company's culture is set by Judy Faulkner, who makes fun of companies that go public. Basically, she's like, no, I'm going to run this company, a private company.
How I want, not answer the shareholders, blah, blah, blah.
Yeah. So we'll never be able to get into a position where you'll be able to buy any Epic. As long as she's alive, it's never going to happen. But let me tell you, if that company were to go public, the stickiness of that company would be amazing. Like that is a company that hands down.
Oh, I would like tomorrow.
Yeah. So then you have someone asked about United Health. United Health at 220 was definitely a steal. At 400, I would say it still has the ability to compound. The only problem is it's not as clear of a value story. I think 350 to like 400 is like fair value. And the thing is, if you really want to make money and you weigh against the risk, it doesn't make that much sense. The challenge with United Healthcare is that you always have these periods of time where Medicare, what's that called? Medicare rates are determined by the federal government. So that adds uncertainty risk. Then you've got medical cost ratios. Like that's another problem. And because they've already gone through one cycle of really bad cost ratios that compress their margins, the market is probably going to be a little bit like hesitant on giving them that durable compounder multiple that they've traditionally had in the past, right? So in the past, you could reliably get a 15 to 20% return on United Healthcare for like, if you look at the stock of United Healthcare from like the early 2000s to where it is, it was like literally like a beautiful up into the right line. But since then, it's kind of like now like gone down and like waffled a little bit. So like, yeah.
Read this.
For a 4,000 person organization, a total first year commitment somewhere between 2 million to 5 million range, and the project itself typically takes 9 to 18 months. Here's how that breaks down: subscription, annual reoccurring, workday prices per employee headcount, not active users. At 2,500 to 7,500 employee band, core HCM alone runs $70 to $110 per employee per year. So, God.
So I'm not going to say definitive numbers, but I will tell you from this first paragraph, this is very close to being accurate.
Yeah.
So people ask and people think that like switching software is so easy. It's not. And trust me, when you're running a business and you drop 2 to 5 million on implementation, and it just took 9 to 18 months of your corporate assets, their time to do this, in 5 years, when the initial contract's up, you're not going through this again. Even if half the company doesn't like it, because you're not dropping another $2 to $5 million to do it. And that's for a 4,000 person org. Imagine what a 100,000 person org is to implement this, and what the first year commitment is.
Yeah. Someone said Epic is huge in NYC health industry. Most of the big places use it. Yeah. Mount Sinai, NYU uses them. All the New York City public hospitals use them. I don't know anyone in the city that uses Cerner right now. Like Cerner is a competitor to them, but I've seen way more transitions from Cerner to Epic that I don't think I've ever seen an Epic to Cerner roll. I've always seen the other way around.
Yeah, no, I have never heard of that. I've only heard people moving to Epic.
Yeah, I'm trying to think if there's any hospital system that switched out of Epic and went to Cerner, and I can't think of one.
I haven't heard of it. And yes, I used Fable 5 Max to do that, because I use Fable 5 Max for everything I do. Because why not?
Isn't that expensive? Like,
No.
what are you doing?
I pay the $200 a month. I don't run out of tokens.
You mean at $200? No, hold on.
Yeah.
Fable 5 Max,
Yeah.
they use credits. Are you
No,
paying
they don't.
credits?
No, they don't.
What are you? No, they are. They're charging
No,
you
they're not.
credits. Yes,
Nope.
they are. Go to your thing. Go to your usage. I want to see your usage, please.
I'm telling you, it's not.
Go to your usage. I want to see.
I'm not. I don't want to go. All right, hold on. I'll go to my usage. Hold on. But no, it's not using credits, and I can show you why. Because when you go to Fable 5 Max and you go to effort, you can switch it to Max.
Right, but
Max
it's using
excessive tokens, resulting in longer response times and may hit token limits. It's not.
Doesn't it charge you credits?
No.
I'm getting my messages like it charges me credits. No. Like, hold on.
Yeah, because
Maybe
you're probably not on the $200 plan.
I'm not on the $200 plan.
That's why. I'm on the $200 plan. I will use my tokens however I want to use them. If I want to play tic-tac-toe with it on Fable Max, I will.
See, look. So let me share my screen. You know, so right here, Fable 5 requires usage credits. Build at toughest challenges. See?
Yeah, it's probably because
Fable 5 is included in max plans or available. Okay, that's why. So I'm on pro plans. So,
right, I'm on the max 200.
I paid Grok $200 a month to try Grokbot. I wasn't satisfied, so I stopped. I was like, screw that. Now I have OpenAI's monthly plan, and I have Claude's monthly plan.
I don't think OpenAI's product's that good. I really don't.
Really?
No. I think that they made a better product for people who want to use it to control their computer, control their email, that type of stuff.
Mm-hmm.
All the answers and research. I think that Claude is just leaps and bounds above ChatGPT and Gemini. I really do.
I have different use cases for each one because I am, unlike you, I'm not using Claude Max to find out what George Washington's birthday is. I'm actually being reasonable with my spend. So I use Gemini for just like image creation and lookups and just general questions about certain things. I use Claude for a lot of reasoning. I think Claude, the reasoning is just bar none. I cannot find another LLM that has better reasoning capabilities than Claude does.
I had to go down a Curse of Oak Island rabbit hole for me. And I gave her like all these websites, and I had Fable 5 try to figure out if there's treasure on Oak Island.
Yeah. I mean, someone's like, Chris, you just exposed your chat history. Like, yeah, I mean, I asked questions like, what's
stock
the
stuff.
Yeah, it's like stock stuff, like other things like a housewarming like registry because I'm buying a house. Like,
Right. It's not like
items.
he's freaking opening up his instant messages.
Yeah. I don't know. Another one is I had Claude go through my inspection report and give me like a rough estimate on how much it would cost to like correct things. And
Yeah.
so it literally like broke everything down and said, like this is something that you can wait 6 months. This is an immediate thing that you need to take care of. So all of those things, like, yeah, I mean, I think AI, I like AI. It's made my life 10 times better because there's a lot of things where I think if you use AI correctly, it's like the greatest thing on the planet. I think the best people for AI is people that know how to ask the right question. If you ask the right question, I think AI is going to like do wonders for you. But if you're asking dumb questions, then AI is going to mislead you into a rabbit hole and you're not going to get a good experience.
You have to be very clear on what you want AI for. And I think, let's finish on this. I made a post, and look, I'm not holding back. People take shots at me all the time. That's fine. I'm fair game. But so is Zitron. Okay. And I read his last letter, and man, was I pissed. And I was going to go into a lot of detail. I decided not to. And this is what I wrote to him. Okay. Ed, I can't tell if you're serious or not. The fact that you said, quote, this is what he said, the only real use case I found for AI in my life have been 3 or 4 times where I've dumped a crash log into one of the tools and said, why broken? And got a result. Am I meant to be impressed? Makes me question what you're actually using AI for. Like, it makes me question what you're actually using AI for, to say that the only real use case you've ever found is throwing your crash log in. Like, and this is the guy that's leading the bear charge. Like, what are we doing?
I mean, his logic is probably that. I mean, to be honest with you,
don't even try. You can't defend.
No. I'm not defending him. I'm saying I think I know what he's doing. The thing
he's selling subscriptions.
Does he have a subscription business?
Yeah, he charges like $80 a year. He has a whole subscription system for his newsletter, like a premium.
Okay. Well, I think what it is if you come out and say something, you are basically the most interesting person because you're going against the grain, right? So there's a good number of people that are going to want to hear what the other side of something is, the argument is. Like, that's what I'm saying. Like, even sometimes when it comes to these videos, like, all of you guys all y'all want to do is talk about like the bull case on things, and you never want to talk about the bear case. And sometimes I feel, I'll be honest, man, sometimes I feel like I get painted as like the bad guy because you guys refuse to be even remotely objective about your own opinions at times.
No, I think you come off as cautious and level-headed because you're willing to go down the rabbit hole of what can go wrong.
Yeah,
And-
the thing is, like, I hate doing that. I can't be the guy that does that all the time, though, man. Like, I hate that shit.
I have straight up said the thing that stops this is all of the CapEx drying up immediately, but there's no sign that that's happening. Like,
Yeah,
I'm going by the data.
I don't like it when I talk to some of you guys privately, and you guys are more reasoned privately than you are publicly. I don't like that. Like, I've had that discussion with a few people where they'll publicly be very optimistic, but in private, they've told me, don't be too bearish, or don't like argue against what the current narrative is, because that's a one-way stop to being ostracized a little bit. You know?
Now, I don't know if that's correct or not. I mean,
no, it is correct. It's true. I mean, look at one of the comments that really I saw on the thing. They're like, "Oh, Chris is on. Why do you have this guy on? I hate him." And he's just and he's like, "I'm gonna leave." And I've seen that comment happen on Amit's morning stream as well a few times. And I'm just like, some of these people, they don't want to hear the other side at all.
People don't
like,
want to think about what can go wrong. That's
yeah.
I get it to some degree, but you know what? It's important to see the other side.
Yeah. I had something similar happen to me in like 2007, where I was with my fraternity brothers, and I kind of asked them, like, and I was just talking about like the housing issue at the time. Like, housing was starting to come down. I mean, I wasn't in the market, and I think I've actually spoken about this story. I said, look, there's something wrong with the economy right now. And this is before we had 2008 level crash, right? And everyone was just like, Chris, what are you doing? Why are you talking about this? Like, no one gives a shit about the housing market. But the thing is, it was something valid that you have to bring out. You have to talk about it. And the thing is, like, people just don't want to hear it. And when people don't want to hear it, and you come off as the bad guy. And it's like, and what I hate about it is that I always want to be truthful. I hate being not truthful to people. You know, when I said to Matt, like, buy puts on Rocket Lab, I came as some people interpreted that as Chris is jealous. And I hated that comment because I was like, I wasn't jealous. I was just trying to be cautious with a friend. If you weren't my friend, I would not criticize you. I would actually be like, yeah, sure, bro. You're right. You good. I respect you enough to disagree with you.
I criticized Rocket Lab the entire way up.
Yeah.
And I still criticize Rocket Lab to this day because I think it does not deserve to be anywhere near where it is. And I'm not changing my stance unless I will change my stance when the numbers tell me to change the stance. And the numbers are not telling me to change the stance.
Yeah. I would rather have a bunch of friends who confront me when
100%.
like the realities than someone who's just going to provide me confirmation bias. Because I think sometimes you get into this groupthink, like logic, and all it does is just reinforce an idea, and it's just a massive circle jerk. And it's like, come on, you got to have that one friend that's like, and like I said, if I didn't respect you, I would not say anything. I would just be like, okay, cool, man.
No, he didn't. Did you see this about Burry?
No, what? That he's shorting more Palantir?
I did not. Now, this is from 8 hours ago. This is not.
No, he bought calls on NVIDIA to hedge
Yeah,
his
I did
bets.
not see this.
Yeah.
I obviously did not stream today. I was a bunch of places.
Yeah.
He bought calls on NVIDIA as a hedge.
That's not a bad idea. That's not a bad
Oh,
idea
it's
at
a
all.
great idea.
Yeah. And this is the thing, like, you can be long and short at the same time on something. Like, some people will say to me, Chris, I thought you said the memory trade was cyclical, but you bought Micron. And I said, I bought it as a trade because I know it got oversold when it went 40% off 1250. I was telling Captain Sleepy Time, 1250, you're hitting some technical peaks, buy some puts on it. And then when it went down, I looked like, oh my God, like he was right. But then I'm also the guy that said, look, at 700 with buybacks coming in by the end of the year, this is a great bounce back play. You know, do I think Micron eventually comes back down like 80% in a few years? Yeah, I still think that, but that doesn't mean that I'm not going to take advantage of a technical bounce on something that, you know, that looks pretty well, you know, well reasoned.
I think that's a big thing. Is it a trade or is it an investment? You know,
It's
and
a
that's
trade.
no, in general, people need to distinguish between the two, because you can make money trading something, swing trading it, and you don't have to be bullish for 3 to 5 years.
Yeah. I that one comment that person made is actually kind of truthful. He's like, Chris, it's because you sound like you're lecturing instead of vocalizing your opinions. I guess that's right. That's a fair criticism. It's just sometimes I come off as very very like forceful in the way I communicate communicate something. And so people like my communication style definitely needs a little bit of improvement. Let's just I will agree with you on that. That's a fair criticism.
Oh, thank you everybody for these. Who holds bag when growth plans over 5 years? 5 trillion is already too high. We're gonna have to see what happens. 5 years is a long time away, and nobody can predict what the actual growth rate would be. Will it be 10 or 20%, not 50 to 70%? Probably, but flat, we just don't know. Alex, thank you. What Jensen said was they are guiding for 70% growth next year, and with constraints, Street was expecting 45% growth. He destroyed guidance. We are earlier than the Street was expecting. Yes, yeah. We are. Parents called to parent. That is a new concept. Crazy idea. Parent should parent. There are times when you don't want jury trials. People are naturally dumb. Jury duty should be a full-time job. I don't necessarily hate that idea. I would love not to go to jury duty. When does management ever listen to workforce? Not usually. Just saying.
I'll tell you when management listens to workforce. When workforce
right before there's a strike or union talk.
Yeah.
That's
yeah. If your workforce is about to turn on you management changes very quickly. The biggest challenge is, and just like I said with the groupthink, there are times where, and I've gotten caught on this because my style is very like forceful sometimes in terms of communicating. This one time at work, all of these people would come to me and say, Chris, you should talk to the manager. Like, this is unfair, blah, blah, blah. And I was like, yeah, you're right, guys. I'm going to go talk to him. And I went to my manager and said, look, everyone is saying like, this is a problem. We need to make a change, And so my manager's like, oh, really? And like went to like the entire group and was like, hey, do you guys feel this way? And everyone's like,
no.
And let me tell you something. I was there like, like that cat that's like, and my manager's like, so is this a you thing, Chris? And I'm like, no, they all spoke to me about it. They're like, well, they're not saying anything and I can't make any changes if no one speaks up. And I was like, you know what? You are correct. And ever since then, if anyone at work ever comes to me and complains or whatever, I'm like, you see that? That's the guy's door. You tell him how you feel. Because me, I'm middle management. Like I was a supervisor. And then you had like the administrator. And so people would come to me because I'm the supervisor. But when management goes from from, like management level to like ground level, they all turn into like the biggest vaginas. And they're all like, bro, I got a kid in college. Like I need my job. I can't get fired. I'm like, so you're saying I'm the one that needs to take the heat?
Yeah, everybody wants somebody else to do the dirty work.
Yeah.
Why would you want to do your own dirty work?
Yeah. So I'm like, when you dig in, Chris, you sound like you just want to be contrarian, which doesn't help your argument. You know what? I do need to, like, these are things that I think if I presented them more with like data, I think I could probably get my point across better. You know, when you are argumentative, as long as you have the data behind you, that doesn't mean you're argumentative. That means that you actually have like real fundamental reason to actually have that argument. Does that make sense?
Data, I mean, data helps. It's what I use.
Yeah. I think if you have the data, it proves out the thing. Like, I think like when that whole thing with Rocket Lab, when Rocket Lab, when it was at 150, I should have been the first one to just basically come out there, put like a chart out there and look like, and just showing people like the levels of overbought on RSI and MACD, and people would have said, holy shit, like that actually makes a lot of sense. Like, you know, this is one of those things that just any sort of like move, any sort of negativity could, you know, bring this thing down. And it's not even a question about fundamentals. It was a technical setup, you know? So
I hear you.
yeah.
All right, everyone. We're going to get going. I'm exhausted. And
one more question. How is Chris middle management with his communication skills? No one else wanted to do the job. No one. Like, I literally, I got promoted to supervisor because no one else wanted to do the job. And I was actually really good at my job too. So, you know, that kind of helps. But let me tell you, I'm no longer middle management. I got offered a middle management role again, and I turned that shit down. I'm fine being lowest totem pole guy ever. I don't have the patience to deal with people. What about you, Steve?
no, right now I'm a manager of one.
You're a manager of one. You only manage yourself, right?
That's right.
Yeah.
I mean, before I was the chief of staff at a 4,500 person company. So
yeah,
I've held every type of position, and I'll tell you right now, I'm enjoying being a manager of one.
Yeah.
It is a lot different.
I like doing I like work. I like my job. I have no qualms about it. I've gotten offers for promotions, and I said, nope. Like my quality of my work.
There's nothing wrong with that. Sometimes promotions complicate things.
I used to be critical of this one guy. I remember he was like 60 years old at my hospital, and this guy was still working at the ground level. I mean, he was a clearly intelligent person, smart guy. And I said, you know, Jimmy, don't you want to like go higher? Like, he's like, Chris, I'm good.
Yeah.
I like going home. I like seeing my wife. I don't want to deal with all the, you know, stress. And at the time I was 20 years old. When you're 20, you're still like got that ambition bug. And then once I got to that level of middle management, I realized exactly what he was talking about. My pay went up by maybe 20%, but my responsibility quadrupled.
Well, I mean, you and Matt saw one of my phone calls because I forgot to mute my mic and I was on the phone for like 20 or 30 minutes. You guys saw the shit that I used to go through and say. And I'll tell you, like, when you are in a management position, upper management, you work at night. Like, there are no boundaries unless it's like 11 o'clock at night. And even at 11 o'clock at night, you could get a phone call.
Yeah.
Depending on the severity of it, but 7 o'clock, 8 o'clock at night, there's no boundaries. So if you don't want to be 24/7, I understand why people pass promotions all the time, because if you have a family, why would you want to deal with it?
Yeah. Yeah. It's one of those things, man. Like, just middle management is the worst position to be in. Like my current manager right now, I feel bad for the guy because there are so many times he has to basically take accountability for something that's not his fault. And I feel bad because he's such a nice person. He's such a great guy. And so he just takes it.
I'm with having staff. Something screws up, it's on you. Even though something screwed up, it's on you. Like, and that's something people don't necessarily get about being in management and moving up through the ranks, that, yeah, you get more money. Sure, there are more perks, but man, having a staff of 50 or 100 or 200, it is not easy by any means.
Is director level middle management? Yeah, it is.
Depends on what It depends on the corporate structure and how big the company is.
Yeah. I there's two places where you've got it, you're basically coasting. When you're at the bottom, you just have a task. Every day you've got responsibilities, you do those responsibilities, you walk into work, you got responsibilities. You leave work at a certain time, and that's where your job ends.
Yeah.
That's where like you want to be. That's like the sweet spot at the bottom. Then comes one layer above that, which is you're managing a small team of people. And so you have to deal with that. And then you've got a person above that, and you're dealing more with like HR related issues and policy related issues on your respective teams that you manage, right? That is like true middle management. The perk of that is that you don't have to do any of the grunt work anymore. You can kind of just delegate stuff. But that's also the role where you're going to get that phone call in the middle of the night, right? Because something happened, or you've got an inspection coming, or you've got some kind of regulatory issue and you have to kind of deal with it. And then it's that level above that where you're in executive leadership.
Wow.
Executive leadership is the bomb.com because you get all the privileges of, you know, that high pay, but you don't have to deal with the minutia of the frontline staff anymore. You know,
But you may not have to
even
deal with the
supervisor
frontline step, but you got to make, I'll tell you, and we'll end after this.
Yeah.
So before I left, we had a situation I had to deal with. I'll talk openly about it. It's nothing that can get me in trouble. But, you know, in the city where we were, the way that buildings are cool, you have water towers on the ceiling that provide condenser water to your server rooms and to your AC units. 3 out of the 4 3 out of the 4 water towers broke, and every floor was pulling from one water tower for the condenser water. And I got the phone call at 10 o'clock at night that our servers were getting fried because the server room was 95 degrees. I had to drive to the office. I had to hunt down the staff that was on the overnight maintenance shift, and I had to freaking figure out how to cool this room without AC. Jerry-rigged fans and everything, blowing air out the door, wasn't working. And I was there until 2 a.m. and had to make the decision at 2 a.m. that I'm shutting down all the servers and we're going to have no communications for 180 sites. And that was not an easy call to make when you're in healthcare. Like Chris can only imagine, like he knows exactly where I would go if I kept talking about it. Like you have that many sites and you're running clinics and that type of thing, like no servers, not good. So trust me, those are the nights that you freaking dread where something goes wrong that's out of your control and you have to make a decision, and whatever decision you make is bad.
The one downside that I didn't mention with executive leadership is you have this level of paranoia, and it's justified paranoia, that you are the first one on the chopping block when it comes to reduction of force, right? Executive leadership is one of those things where you're not dealing with the day-to-day BS, but it always deals with like the organization always shifting. And that's where you need to like make friends with
You're one
like
bad decision away.
Yeah.
You're one bad decision.
Yeah.
You know, because you're running the projects, like you're responsible for decisions that carry so much more weight that one bad decision, you legitimately end up on a roof.
Yeah. I've seen a few times where the hospital system will switch like the CEO, right? And the new CEO chops up all of the executive leadership and brings in their own guys. You know, like, oh, I worked at this hospital before and I worked at this hospital. So like the CEO, like that's the other thing too. Like once you get to that executive leadership role, you know who you can count on and you know who you can't.
Absolutely.
So
and by the way,
sorry.
Nick, I'm going to contradict what you said. And keep in mind, when you stand up in office, you have to have your own data center there. You can't go to a cloud provider because you still need networking. And you can have all your stuff in Azure, AWS, or GCP like we did, That's not what I'm talking about. What I'm talking about is you still need some on-prem servers to make stuff work, but more importantly, you need all your switches, you need your internet, you need your firewalls, because in an office, you're not running it off of Wi-Fi. You have internet drops. Ethernet only goes 300 feet. If you have a big office, you have IDF rooms, and everything turns back to your main data center for that floor. And when that overheats, you have to make a decision. And in my situation, where we couldn't run my 4-ton unit and I did not have a supplemental air cool, I bought one after, you have to make a game time decision. And if I have to shut down all of my switches and firewalls, it doesn't matter that everything's in Azure. You can't pull it down because there's no connectivity.
Yeah, and that's some applications, depending on the industry you work in, have to have like 24-hour runtime.
Yep.
And so what happens is you usually have a backup. So you do something called DR exercises, right?
Oh, disaster exercises.
Yeah, disaster recovery. So basically, so what happens is you have your applications like all running, and you have your prod, right? So that's where everything is running off of. And that could be hosted in the cloud. That's fine. Like prod is always on, everything is good, you know. But what happens is, let's say connectivity gets severed to that data center, but you still have a business to run. And the thing is, you can't be like, we can't just say like, oh yeah, our connection to Azure went down, let's just shut the hospital system down. Like, no, you got sick patients all over the place, you know, you've got active appointments. And so you go into DR, disaster recovery, in which case you point all of your applications to like a backup, right? And what happens is there are certain applications that you can point towards on-prem stuff. And there's actually a lot of legacy applications that haven't migrated to the cloud that you need on-prem stuff for. And it actually is very cheap to host. So it doesn't make sense to actually even bother going into the cloud. So, you know, like there are a lot of software, especially in hospital systems, that are like one-off softwares that were like written in like 1995, but they work. They're cheap to manage. They're cheap to maintain. It makes no sense to try to put it in the cloud and then deal with managing it and paying like fixed fees. So, you know, a lot of people are saying like it makes sense to have everything in the cloud. And I agree. Like I have applications right now that I love the fact that we have cloud and, you know, we don't have to worry about anything else. But then there are other like really, really scaled down like applications that I think my organization pays like barely a few $1,000s for it. And it's like a critical function for the system. And it's weird because, sorry, go ahead.
So server room has its own climate control. So I'm going to tell you that it doesn't matter. And the reason it doesn't matter is because there's two types of cooling. There is air cooling where you can pipe in to the ceiling and have standalone huge 3, 4, 5-ton AC units. And then there's water cooling that pulls down from the condenser units. And water cooling is preferable. And if the water towers get screwed up, you can't pull condenser water into the unit to cool your server room. And then if electricity goes out, you can't run an air-cooled unit. So there are situations that get out of your control that you have to make a decision, because if you run the equipment for too long at too high of a temperature, you will fry it and then you are completely screwed. So sometimes it is out of your control, and the best thing to do is shut it down. And what Kristen is talking about now is the disaster recovery. And you could do a colo site where you basically build a mirror image at a different location, and you can just cut it over to another physical, or you can layer on a bunch of different products and rebuild an image in the cloud and cut over to that. And that is a monthly fee. So there are battery backup doesn't work unless, look, if you own your own building, it is different. You can put solar in, you can put generators in. If you're in Midtown Manhattan, you can't put a generator in. Like, you are at the whim of the building. Like, there are things you can't do. So yes, if you own your own building, you can bulletproof it as much as you want. But if you're leasing space in any major city, you are going by what that building provides, because you cannot put a generator on your floor. Like, there are just things you can't do.
You want to know something funny? You remember that time where Bellevue Hospital, I guess it was like during one of the hurricanes, it got flooded, and
Yes.
basically their battery backups. Okay, so all hospitals, for the most part, they all have generators, right? So just in case something happens, you've got literally sick patients. So you can't be in a position where like you turn the lights off for an extended period of time. So we had that situation happen. Was it the hurricane or was it like a blackout? I think it was one of those things, if you remember.
Yeah, I don't
Now-
really. It could have been Sandy. It was probably Sandy, right?
Yeah. What happened was there was a giant diesel like fuel tank, which these generators run on. They were running the generator to produce that electricity to like keep the hospital going. The problem is there was sediment buildup at the bottom of the diesel tank that got sucked in, took out the generator, and then literally like the entire hospital's electricity, it went out. Bellevue's a big hospital. They had to literally like carry NICU babies like while pumping and doing all this stuff down like stairs. That's how bad it got. So like there's so many things that happen during disaster recoveries like and disasters that like you just can't forecast. But let me tell you, that's when like stress comes in, man.
It's another level.
Someone mentioned something really cool too, like a load balancer. Like so I have right now like an application that I manage, and we have like 5,000 users concurrent at any time that go into this application. And the thing is, we have something called a load balancer that sits in between like multiple. So basically what happens is it routes traffic. So what happens is, let's say server 1 is where that application is loaded. Every server basically, is an application server. So what happens is when you click on a link or you click on something, it connects you to a server, which then is hosting that application. But what happens is, you don't want 5,000 people to be on server 1 at the same time. Like you'll destroy the thing. You'll get latency issues. It's a big issue. So what you want is routing. You want smart routing, and so that's what a load balancer does. And yeah, you can use the load balancer to the persons who mentioned it as a way to like switch over to your disaster recovery. So if one node goes down, you can switch to another one. But that's another like critical piece of equipment that not a lot of people know about. But there's companies out there that do nothing but load balancers. They make a ton of money.
Yeah, there's a lot of companies that do some weird things that, you can pay a ton of money for. All right, everyone, we're gonna call it. I need to eat. I'm starving.
F5, that's the one. F5, that's the one that we use.
Oh shit.
Yeah.
Rob said the same thing. F5.
Yeah, F5 is the one that we use.
All right, everybody. Thank you for joining us. We will see everyone later. Have a great night.
Look at the stock. Hold on, before we go, if you got 1 minute, just check this out.
1 minute.
Yeah, 1 minute. Look at this stock right here. This company F5 does nothing but just load balancers.
I don't even know that's all they do, load balancers.
Yeah, I think just load balancer. I think they have like some cybersecurity stuff too. But look at this. It was like $10 in 2020, in 2002. Now this thing is almost $400. Look at that thing. God, man, I should have been buying this company. Like, this is one of those stupid like companies that like it's so critical to all IT, but no one knows about.
Okay, I need a question answered. Why was Tanner dressed like this today?
He was trying to be Jensen, so he put on a stupid wig, like a white-haired wig. That was his Jensen thing. Look at make it bigger. You see the leather jacket and the white hair.
No, I see the leather jacket. That's fine, but Jensen's hair doesn't look like that.
He just found a white wig. I mean, at least he didn't like go like Asian and try to do that and gone all super, hardcore racist on it.
I mean,
You know, that would have been a problem. So he went with the white hair, which is way more acceptable than, hey guys, my name is Justin Huang. You know, that would have been bad. So
he could have just dyed his hair and got a haircut.
and no one's dyeing their hair for earnings call, man.
I mean, he's a manager of one.
Yeah.
He can. All right, everyone. We will see you later. Have a great rest of the night.
Take care, guys. Have a good one. Take care.